So as we move on to the accounting equation and thinking about its balancing and the importance of its balancing in terms of the transactions that happen in business, I want to give you a couple of examples that will help you think about how this equation really works for business and throughout every single process and transaction that occurs. So make sure you've spent a little bit of time reviewing what constitutes an asset. These are things that provide future benefit to a business. And what constitutes liabilities. This is any time that the company owes a creditor for any amounts due or any services due. And then equity represents what the owners own within the business. So thinking about that and thinking about balancing the equation, let's just do a couple of examples. So if a company receives cash for providing services, the company has earned what we know as revenue. And revenue is something that makes equity increase. Now, when we receive cash as a business for that revenue, cash is an asset, and we want to increase cash. So therefore, we always, again, have to stay in balance and make sure that we have increased both sides of the equation to keep it in balance when we earn revenue and we receive cash. Now, let's say that we also received cash because we borrowed money from the bank. Now, that's not revenue for a business. Instead, that constitutes what we are going to call a notes payable. So again, keeping the equation in balance, we're increasing assets and increasing liabilities because that note payable is what we owe to a creditor. In this case, it's the bank. Now, what if we pay cash? Let's say we pay cash. We're going to deplete our asset of cash, but what are we paying for? Let's say we're paying for our water bill for the month. Now, what that does is it's actually going to increase our expenses, but it is going to decrease our equity. Now, one important note to make here. This increase and decrease has to do with the impact on equity. And that is very important to think about because as revenue increases, so does equity. But as expenses increase, we're actually decreasing equity. And that's how we keep the accounting equation in balance. That might take a little bit of time to sink in, but that's something that we always got to make sure that we work on. Now, the last example I want to give you is, let's say that we purchase inventory. Now, we're going to be getting into manufacturing costs. So we're going to talk about purchasing raw materials. And let's say that we make cookies. So we are going to increase our raw materials inventory. Now, this is going to be important to recognize. Anytime we buy something to use in our business to make products, those are assets. So I've increased my raw material inventory. I haven't actually started using that raw material inventory yet. Now, let's say I buy that on credit. Well, I'm also going to increase my accounts payable. Now, accounts payable is an account that we use to keep track of, again, money owed to others or creditors, but this is kind of an open or what we would call trade account. This is different than a note, which would be represented in the notes payable as a loan. Now, that's just a few examples to get you started, but again, spend some time focusing on what is the definition of an asset, future benefit to the company. What is the definition of a liability? That's a future obligation for the company. And what is equity? That's all of the ownership for the owners in the business.